Hello everyone, welcome back to your class. And remember, as we talked in the previous lecture, we are going through the very important phase, that is accounting terms. These are those very few basic accounting terms which we must be aware of. Okay, so in the same agenda, we continue in this lecture. And if you're the user for the first time here, you're viewing it for the first time, don't forget to subscribe the channel and press the bell icon. Okay, and there are many ways to get in touch. Feel free for that. And so we continue with the lecture, the content. Voucher. In the same series, we are coming up with the voucher. The voucher is a term which is used for any kind of documentary evidence that is available in order to support a transaction. Any kind of what you call that documentary proof to prove that a transaction has actually occurred is called voucher. That can be a pay-in slip, that can be a cash memo, bill, invoice, anything. Any movie ticket, bus ticket, train ticket, anything which contains the information regarding the transaction, date, amount, the person to whom it is paid, how much it is paid, any kind of tax details, all these things are there. All that is voucher. Okay. Then we talk about goods. What are goods? The commodities or the items or the products that a business deals in. That means the business is selling and purchasing that very product. The business is purchasing something with an intention to resell and make the profit out of it. That is goods. Okay. If we are purchasing something for the business, it is not goods. Like if you are purchasing a computer for your business, for using that in your office, it is not goods. But if you are if you are purchasing the computer for reselling it and making the money out of it or the profit out of it, that is goods. Like if we purchase a house, a flat, that is an asset for us. But if we are talking about a property dealer, he is purchasing a flat to resell it and make money out of it, that is goods. Like in your school, the furniture on which you sit, it is an asset for your school. But for that furniture dealer, yes, it is goods. Good. Okay. It is different from good. Okay. It is always termed as goods, not good. Now comes drawings. Any amount, if it is withdrawn from the business by the owner for his personal use, is called drawings. Yes, capital. What was capital? The amount invested by the owner from his personal source. Yes. Then, if he is withdrawing something out of it, if he is taking it away from the business, he is reducing that balance, and this withdrawal, this amount is called drawings. Clear? Then comes purchases. The amount of goods that are purchased for the business, either for production or reselling, whatever that is. If we are purchasing goods, it is called purchases. It can be cash, it can be credit. But if we are purchasing an asset, like I told you the example of computer for office, you are purchasing a computer for office, that is not purchase. You are purchasing the computer for reselling it, that is purchase. Okay, that means if we purchase an asset, it is not purchase. If we purchase goods, it is purchase. Clear? Good. Now, what is stock? Stock or inventory. It is a measure of something on hand goods, spares or the items in the business. We also call it stock in hand. Stock is of three types: raw material, work in progress, and finished goods. If there's a trading business, we are selling and purchasing only, not manufacturing anything. Then it is the closing stock, that will include what? The stock or the goods are resting with us or left over with us at the end of the accounting period. Okay, stock means what? The volume or the quantity of goods that are left with. Sorry, the yeah, the stock is the quantity or the volume of goods that are left with us at the end of the accounting period. Okay, if it is a manufacturing unit, as I told you, raw material, semi finished or work in progress, and finished goods, these are three are there. So if according to their category, whatever is the volume at the end of the year, that is closing stock. And what is opening stock? At the beginning of the year, the value of the stock at the beginning of the year is opening stock. The value of the stock at the end of the year is closing stock. Okay. Now, debtors and creditors, the people or the persons or the entities from whom business is supposed to realize the money, who owe to the business. Remember this thing, who owe to the business, who are supposed to pay, they are called debtors. The, from whom the business is supposed to receive, they are called debtors. That can be an individual, that can be a body corporate, any business entity, anything. Okay, and it is an asset for the business because we are supposed to receive from them. Okay, yeah, that picture shows anyway you have to recover the money from them, that's it. And then what are the creditors? They are just the opposite of it. From debtors we receive the money, and about creditors we pay them. Debtors are generated out of mostly the credit sales or the credit transactions that we allow others. We are giving a credit to others, it is we are creating a debtor. We are selling the goods on credit. We sold the goods to Ram. Ram is our, yes, debtor. And if I purchase the goods from Mohan, what happened? I am purchasing it from Mohan on credit, udhar. Okay, what is happening? I am Mohan's debtor and Mohan is my creditor. I am supposed to pay to Mohan. Mohan becomes my liability. Okay, that's it. So we conclude here the accounting terms. From the next lecture, remember, stay in touch, because in the next lecture we are going to start with a very important part of accounting theory base, and that is going to be accounting principles. And children, if you are able to understand them, you are simply going to, I'll say, float through the whole accounting, because the whole accounting is based on these very principles, these very rules. Okay, we are starting with that very soon. And remember to copy down, pen down all these points, whatever definitions I have given, and remember they are the easiest one to remember. I'll say memorize. And don't forget, subscribe the channel, like and share also, so that the maximum people are getting benefit out of it. Okay, and that is the main motive behind all this exercise. God bless you, stay healthy, and be in touch.